You're in the Business Insurance Zone with me, Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. This week on The Biz, the Elder Care series. And on today's show, the strategies that pay for extended care with care specialist Diana O'Donnell McNamara, elder care attorney and consultant
When it
gerontologist.
comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, day 3, elder care attorney Diana McNamara. Diana, I have to tell you, thank you for coming.
Thank you.
If you've missed any of our shows, you need to really watch Monday, Tuesday show in order because we're kind of trying to do some building blocks today. And where we're going today is strategies on how to pay for all this. I mean, when you started talking about $8,000 a month on nursing home care, I was like, well, that's a lot of money. How are we going to do this? So it's not just a matter of, we're actually collecting the services, giving a menu of services that are out there, which I kind of like. I kind of like to see what's the value proposition here. But if there's a value proposition, there's a cost proposition. And I have to say, is that worth it? Should I stay at home? Should I go to a nursing home? Can I get adult daycare? If you missed any of this, go back out to our site, www.thebiz.tv, and just watch Monday and Tuesday show. Well, we're talking today, though, about some of the strategies that we can do and really employ for the benefit of, I keep thinking of senior care, but I keep thinking of Steve at Senior Care here because I just entered this month what I call the gateway into Social Security. I guess I have to start thinking about all this. So talk to me and walk me down through this. We all know about private funds. Is that a good deal or a bad deal?
Well, depends on how much you have.
Right.
Exactly.
So people self-insure? Do you think they self-insure in this?
They do. They do. And they probably shouldn't because I've seen long-term care insurance dramatically improve the services that people are able to afford. So I am definitely a fan of long-term care insurance.
Now, let me just ask you as a side note. Long-term care insurance, but not like annuities with a long-term care rider? Or
well, it's just going to depend, I think.
Okay.
I partner with a financial expert in those areas, and I love to bring one onto the team, what I call the care partner team of advisors that can help serve our elder clients.
And you actually do this. You have a care partner team.
That's what I like to call it. To bring in, none of us can know this entire area of elder care or elder law. So it's important to bring in the people who have the expertise and pick the right products.
There's specific
obviously.
laws to this, right? Too. I mean, there's some legal issues here, right? When we're talking about elder care and what are we doing the right thing? Are we using the right trusts? All these things that actually incorporate into this.
Well, absolutely. I mean, picking the right planning documents, legal documents, whether it's a will, whether it's a revocable trust, whether it's an irrevocable trust, and how you fund that, all comes into play in the financing of your long-term care and all of the sources of payment for that financing.
Let's say I can't self-fund. I don't have that kind of money. What are my next options?
Okay, well, it's important to look at community resources. There are a lot of options out there, and communities are wanting to promote people to age in place. And so you see services such as Meals on Wheels. They may be on a much smaller scale than is needed, obviously. But then you look to family money. And nobody wants to look to family money because, unfortunately, the adult children often have their own children still on the payroll. If you've heard that term sandwich generation, that's out there a lot.
I believe that. The baby boomers are paying for, they're
Absolutely.
burning their candle on both sides of the generational curve.
Yes, they are. And even if it's not financial resources that they are paying for their elder parents, their time is extremely valuable. So when you have family caregivers who are either taking off time from work or having to quit the workforce altogether, there's a cost to that. There's a cost to that. And that shouldn't be forgotten in the equation of what's it going to cost to provide long-term care for quality of life.
I noticed long-term care contracts started including this respite idea for caregivers because they were getting burned out.
Absolutely.
And I think that was a huge industry. For the once in our industry, actually saw something and got proactive about it,
Right.
I thought.
That was an excellent addition, I thought.
Well, when I'm talking about it, so I understand family caregivers, and I know, like you just said, and I give a salute and a shout out to the female baby boomers because these gals are really the ones that are taking care of their mom and dad.
Yes.
And not that there's not guys involved, but bottom line, and by the way, the heads up on that is just keep in mind that almost everybody that has died in the World War II and Korean War, their wives are still alive, being cared for by their baby boomer daughters, who wants to know why you haven't talked to mother all the times we were talking about finance. And I've noticed that 73% of all advisors are summarily terminated by the baby boomer in charge. Look out. It's time to learn a new conversation. It's time to understand how women think about caregiving, because they're going to be running the show economically all in the next 5 and 10 years. It's going to happen.
That's right, Steve. And they're the daughters and they're the daughters-in-law. And I don't want to forget the sons either, because the trick that I see with sons who are caregivers is that they don't often recognize that they really are that role, because it's not the traditional role. And they often are the last to ask for help in what they need. So encourage everyone to get the help that they need, because who cares for the caregiver? If the caregiver burns out, then everybody loses.
I've
right?
noticed, and of course, in our business, long-term care insurance, that field of carriers that is actually offering long-term care has shrunk. We're down to, I'm going to say right now, I know of at least in my head about 10, but really 6 that are really playing. And those carriers right now, I mean, we're talking about a very reduced inventory. Now, there are products that we talked about that are actually hybrids, annuity with LTC riders and life insurance with LTC riders. And don't forget, the Pension Protection Act of 2006 has a lot of cool tax ideas that you can do with an annuity with gain and pay that for your LTC and not to pay the tax on that gain if as long as it goes for that kind of price. When we come back, I want to talk to you about, should I be indemnification or should I be reimbursement? Is there a difference? Do I care? We come back from the break, we're going to talk all of the best strategies about paying for extended care with co-host Diana O'Donnell McNamara. And don't forget to check us out on IULUniversity.com for the best training and education when it comes to life insurance as a retirement income plan.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
You know, living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Diana O'Donnell McNamara. And remember, you can order today's materials at thebiz.tv. And while you're out there, click on the Backup Technician icon, which is on our Biz blog. Well, that's where I blog, for the free 30-day free trial for the best needs analysis and educational material that address almost every financial planning scenario. And just a heads up, before moving forward with any of the ideas you ever hear on my show, always consult your tax advisor, your legal counsel, as well as your broker-dealer compliance department if you're so FINRA licensed. We're talking about some strategies to pay for this because I don't know, a lot of people, not everybody can self-insure. Not everybody can hit their family up for help and money because they got their own issues with their own kids in college and everything else. So then we're looking at the ability of looking at long-term care, and everybody says, well, should I do indemnification or should I do reimbursement? Which is the better? A lot of the planners always like to go, I think they lean more towards the indemnification just because then it triggers the ADL events, trigger the actual initiation or the policy benefits, and then we're off to the races and the check just comes in until the benefits go. But I'm not sure that's always the way to go. So reimbursement could be a way to play. I mean, because you get dollar for dollar, and some contracts will actually give you a little bit more benefit if you're willing to go through the accounting.
Right.
I don't know if that's a good thing or not, but I just wanted to bring it up just because everybody always talks about it and says, hey, Steve, which one's the best one? Depends upon the contract, depends upon what you think you're going to do. And I've noticed, I've been blogging lately on people saying, I don't need to buy this until I'm really older. And I said, you might want to think about differently, especially, do you have family history of confinement? Do you have family history on chronic illness?
Yes.
I know you're okay. We're healthy today. You're 40, 45, 50. But do you have a pattern that grandparents, your parents, I'd start saying then you may have a propensity, a disposition, a predisposition. So you may want to check that out. Well, let's talk a little bit more now. We talked about public benefits now. How much is there? Is there a lot out there?
Well, you'd be surprised. And one of the first things folks automatically go to is, well, Medicare will take care of me for a long time in my old age.
Well, will it?
Well, Medicare is a health plan. It's got a hospitalization piece to it, it's got doctor's visits piece to it, and it's got now prescription drugs. For the past couple of years, we've now had prescription drugs. Well, that is not long-term care. That's not what's meant by the housing options and the custodial care, like home care that we talked about. That's not Medicare. So along when Medicare was adopted, that was 1965, this concept of Medicaid, that was the long-term care system that was put in place in our country. And there are a lot of myths about Medicaid. It's very misunderstood. But for now, it's the only system of long-term care benefit on the public sector that we have. And it is means tested. So if to qualify for a Medicaid benefit, you have to have certain medical needs and you have to have certain financial requirements, meet those two tests. And what Medicaid will even pay for depends on the state. Medicaid is a combination federal and state program. The feds provide some regulation, and then within those guidelines, the states make their rules to fit. Arizona, for example, has a more progressive Medicaid program than a lot of other states.
Surprisingly, since we're such a conservative state.
I was surprised too.
What about VA benefits? Do they actually do this or not? Is this part of there's extended care and VA benefits like
Absolutely,
this? There is.
absolutely. Most people think of veterans benefits as limited to folks who are disabled while in service or who spent their 20, 30, 40 years in service and actually retired and got a retirement benefit. And yes, those are all there, but there's a little known benefit, and it's getting more press now. It's getting more press, both positive and negative, because the Department of Veterans Affairs is very backlogged in claims. But I've seen it dramatically help clients as a way to help fund their needs and their services that they need. And it's called an improved pension, and it's anyone who is a wartime veteran who was, other than dishonorably discharged, and served at least 1 day during wartime and at least 90 days in active service, can qualify for this benefit if their needs are enough. And that benefit also extends to widows and widowers of that
veterans.
veteran.
Wow.
Yes. And so I've seen it be a wonderful value to clients because it's a cash benefit.
When I think about these are public sector areas. But when I'm thinking about my own, give me the basics with our time closing. Give me the docs. What kind of docs do I need? They're must-have docs.
I call them must-have documents, and absolutely number one, everybody needs to have powers of attorney to have a plan in place for a surrogate to be able to help you in a time of incapacity, who will speak on your behalf about your finances and the health care that you would like.
Is that different than a directive?
It's the same thing.
It is, okay.
It's the directive is basically speaking now about what directives you want for your health care later on when you are no longer able to speak or do not want to. I stress time and time again that pick people who can be your powers of attorney, what we call agents under a power of attorney, who can really be trustworthy, carry out your wishes, and I mean carry out your wishes, not what they think is in your best interest. So to be able to fulfill that, you've got to have the conversation. There's no better way to have someone take care of you and help in these matters, but to have the conversations and know what's wanted.
I've heard you say many times, communicate, communicate, communicate.
Exactly.
wills, trusts, power of attorney, directives.
That's right.
Those are all the things we need. Remember, you can follow me on Twitter, Facebook, LinkedIn, or email me at steve@thebiz.tv. Well, that's the Buzz on the Biz for today. You've been in the zone, the Business Insurance Zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.